What's up everybody, Tom here with another video, and in today's video we're talking everything about the markets across the world right now, including our gap fill analysis for the S&P 500 and other indices, our thoughts on the current crypto market downturn and possible accumulation base that we've got. We also have Tesla, US oil, gold and other commodities, and so much more. The FOMC statement is due later on this week, and that's what's causing a lot of this volatility in the markets. But we're hitting big bases across the board. We're going to be seeing some volatility, and on top of that, we've got the quadruple witching event. So it's getting spooky ahead of Christmas, but will Santa come to save us? A lot of people are starting to doubt him. Stay tuned to find out more, guys. This video should be a good one. See you soon. All right, everybody. Well, here begins our market recap for, of course, the 14th of December 2021. And what better place to start when we're talking about markets across the world than the S&P 500 large cap companies. We've got Microsoft here, 3.26% down. And in general, technology, software, all of those markets were not doing well. We always start here and then we get into our crypto analysis, commodities analysis and everything else, because we want to understand what some of the biggest markets are doing. Are they fearful of a certain news event? Are they preparing for the worst, or are they just finding a standard movement? So here we have the Nasdaq, we've got the S&P 500, Dow and Russell, and you'll notice it was all about really the Nasdaq fall off. It went down as much as 2% on the day, found some buying pressure and then moved back up. But as we mentioned, the S&P 500 is the major index we need to watch, and it found heavy support buying around the 4,600 or the 460 on the SPY. It then bought near the close, sold off a little bit ahead of the FOMC, and then of course a little buy there in the last couple of minutes. So in general, Wall Street was actually playing with a lot of retail traders. They did find support at a key level, and next up we have to find out whether that level is going to hold. And I think all it will pin on is what is going to happen with this FOMC. If it doesn't hold, the bears actually may get back in control of this stock market. And if it does hold, it looks good for the bulls and possibly Santa will come back to town. Let's have a look at the sectors because of the FOMC statement coming out. Financials did well. This is ahead of maybe some interest rate discussions for 2022, up 0.6%. Technology didn't like that, down 1.64%. And all of the other major sectors stuck in the middle, down and up slightly across the board. So we've mentioned gap fill at the beginning, and this is some work done by Ian in the community. Thank you very much, always to him. And he found that when he studied the 1927 S&P 500 all the way to 2021, with the up gaps, we tended to fill most of them over time in terms of up gaps, but they were generally filled within the first kind of 7 days, and then the stats started dropping off hard. So if you're ever looking for a gap fill, usually you're looking for it in that first little period, then the calendar month, and when it says it fills the rest of them later on, that's usually through a crash or a major correction that ends up filling all those up gaps. So some great stats here and something that should be helpful for day traders and other traders alike. Now, a lot of people are getting Santa Claus rally confused. They're saying, okay, this sucks, December's terrible, my investments are down, my trades are not doing so well or anything like that, because they don't think about when Santa comes to town. Now, Santa's not delivering our presents until Christmas Day, ideally. So when you're talking about the stats of Santa coming to town, it's usually later on in December. And of course, he then flees back to the North Pole in early January. And that's when you actually get these Santa Claus rally kind of runs. That's usually when the big stat kind of comes out and people start to say, is this statistically likely that it's going to be green over that period, during the period of low volatility when most of us are with our families and of course spending time with them. So Santa technically hasn't been here, but have we all been naughty this year? I'm not sure. He may not come. We'll have to find out, and we should be able to find that out, well, very soon, because it will be Christmas in only a matter of weeks now. Can you believe 2021's almost over? Let's talk about some technical analysis though. Let's get into this VIX. Let's talk about some of the things that are making the market fearful at this stage. So we have here the VIX, often known as the fear index for anyone that's not aware, and it's at 21.88. Not a good number. Obviously, this still means a high level of volatility. Anything above 20 is a cause for some concern, and we have been above and below 20 several times over 2021. So once this FOMC meeting is over, unless it's really drastic and it starts selling off the market, you would think that volatility may drop And then what's going to happen is ahead of quadruple witching hour, it might spike up again. We've had that happen quite a few times. So remember to subscribe if you haven't already, because we're going to be covering quadruple witching hour this week in quite some detail to really get you to understand what's going on, why it happens, and why you usually see this increase in fear just around that period as well. Something that should be very interesting to many of you. So let's put things in perspective. Should we be worried about the markets right now? Well, the answer at this stage is probably no, but that doesn't mean that we won't be worried should certain things occur. One of the reasons that we may not be worried is because we have a lot of puts in the market. Now, counter to most people's belief, when there are a lot of puts on the S&P 500, and this is of course bearish style positions or insurance-based positions stuck on the market, we don't tend to see the market usually go into a crash. It's when you have a huge amount of calls that the market is starting to look frothy and often turns around. So remember, when the PCC is really low, it tends to be something that you should bring across with your technicals. And when the puts are really high, it doesn't tend to mean as much of a crash usually is present. And that's something that we are seeing at this stage. Still a high level of puts in comparison to calls in the market. The other thing that we're looking at here is the DXY. So we've been talking about the dollar index quite strongly for many months now. It's looked very good. It had that double bottom base, and we obviously saw a massive resurgence in DXY. We now have a weekly here, which is showing us that there's something big brewing. We've basically got a rejection, a long leg doji, which is a high, a low, an open, and a close similar to each other, another indecision candle, and a potential breakout this week above should that occur. So we go into something like a daily, and it's starting to look like it wants to close and move higher. Now, why would it be closing and moving higher? This is an anticipation of probably interest rate hikes and what the FOMC statement and the Fed are going to be saying about 2022. We already know that they're going to try to hike next year in interest rates. It's the question of how many times. And as the market prices in multiple interest rate hikes, usually what happens is we get a strengthening dollar as long as other currencies aren't necessarily doing that. And it looks like the US is going to lead in this case of trying to raise rates faster than others. So at this stage, it's between 2 and 3 interest rate hikes are expected for 2022. Now, 2 is probably more likely the one that people are pricing in, and 3 is more of the speculative one. Some people have said upwards of 4 now. I'm not so sure about that. I don't think the Fed will do it. But this is to, of course, combat the inflation, which is no longer transitory, guys. We can't use that word anymore. Powell is now nominated again for another couple of years, and therefore he feels pretty good. He's not using that transitory wording anymore. He's like, inflation is here and we need to combat it. So that's why everyone's freaking out ahead of this statement. But the dollar index is out, and that could bode badly for some trades. Let's think about gold. If we have a strengthening dollar, traditionally that will weaken gold against it. And we did see that strengthening dollar crush gold in the previous session. It sold straight back off to support, but really it's in between resistance and support right now. It's like in a channel. If we breach to this upside, well, that's the first positive we're seeing. If we break past 18.11, 18.10, well, we know we've been talking about that all week. So gold and silver, we'll have to find out more information. It's trapped in a zone. We'll follow this up in the next couple of videos. Let's check out US oil. So US oil actually doing some things right here. We have resistance acting as support. US oil bought off that level a little bit. And you'll notice this massive trend line that I've got set up here for the recovery. So this goes through all of the recent highs here. And if we start to see a recovery where US oil breaks through that zone, will that be the first positive sign? Absolutely. We get through there, bullish buyers come in past 72, then 73 is the big resistance zone horizontally. We breach that, 75 is the next participation zone, and we breach that, well then we're talking 78 plus on US oil. So there are some good trading opportunities on this particular pair if you know what you're doing and know how to spot them. So one that we'll be watching quite closely over the next couple of weeks. And we do not want it at this stage underneath this 69 area. This is currently where the bulls should reside. And if the bears get into it and sell it under there, well, all the way back down we go to 65.50. It's going to be a bit nasty. Let's move over to Tesla. Speaking of bears, there were a few bear sellers here on Tesla, and then it kind of bought near the end of the day. So some buyers came back into it. an uncharacteristically big break underneath 1,000 is what caused this. A lot of people now calling for the 900, which is the previous resistance or the trend line. And I think it's to be determined really here with Tesla. People buying this level are probably buying it because they want cheaper price and they're looking towards an investment in Tesla. Traders are going to be looking very closely for the signs of potential weakness so they can short it down to 900. I'm sure many traders are looking at that. And big bulls are looking for it back above 1,000 so they can feel more confident it's going to move to that 1,070, 1,170. There's so much importance around this 1,000 and 900, and at this stage it's stuck in the middle of nowhere land, which really bodes well for scalpers and day traders. And I think there's going to be a bit of volatility on Tesla over the next couple of days ahead of not only the FOMC, but also quadruple witching. A lot of options expiring on this one, which we'll look at later on in the week. Apple, much of a muchness. I mean, what's going on here with Apple? Really far away from the daily 20. We know it likes the daily 20. It tends to reside back to that. And you'll notice that when it jumps away from it for a while, it tends to go into a sideways action and then it can take some time to get ready and start it again. Now, the problem with Apple is if you look at it on some fundamental basis, it's actually getting really expensive again. It's almost as expensive as it was over here and from a PE ratio. Now, during 2021, it was a pretty bad year really for Apple until recently. It was actually creating more revenue, but it wasn't going up. And that's because the PE ratio was actually dropping into a more reasonable area. That has now changed and we've gone much higher. And while we talk about technicals here, I think it's important that we know that we're moving far away from some of these key moving averages that tend to be better investment and trade levels for something like Apple. So it hit 180, it's a big deal, obviously got close to what, $3 trillion market cap. My goodness, it's just insane. And now it's got that daily long leg doji on it. So I think I'd be watching this long leg doji, high, low, open, of course, and close. And what we're looking at is either a closure below, let's go to the daily 20, or a closure above. All right, well, we might be looking at some new all-time highs. I tend to go with the bear side here on Apple, even though the trend's up, but that doesn't mean that it's not going to go up over time. Of course it will. It just seems like it's a little bit far away from some of the moving averages. What do you guys think about Apple? Is it overpriced right now? Let us know in the comments down below. Let's move over to the indices, and we've got IWM. This index sucks, doesn't it? The index continuously finds support, but it hasn't broken either way. We've got support here. This is the weekly. We know we don't want to be under 212. I mean, that would be a shocking closure here for IWM if it did happen. And you can see what's at stake. A massive decline here underneath. That would bode poorly for the market across the board, because what it's really saying is the small companies are weakening. The breadth is bad in the market. We already know that, which means that not all the stocks are going up at once. It's more like FANG stocks, and we're seeing a lot of random rotation. We've got movements into utilities at the moment and consumer staples. And if we get a breach of the IWM underneath, wouldn't that really be cause for concern? I would say so. And that's a big area that we need to be watching. But at this stage, IWM's at support. We're looking for turnaround stories. We haven't had it yet. If it gets through 226, I'm going to put an alert on that area just because I think it's such a big key zone for us to be talking about together on the channel. And at this stage, we're looking for lightning bolts, double bottoms, something to show us this base wants to hold. We haven't seen it. Possibly after the FOMC, we'll get that resurgence of IWM, but it is on a very hectic level of support at this stage. Nasdaq is kind of similar, except for with Nasdaq, it weakened. Long leg doji here near the end of the day. We should see more after the FOMC. Of course, weakness underneath this level. Where do we go? Most likely the bottom of our trend line. And where does that put Nasdaq? Well, it puts us in what's been very, very, very good buying pressure for some time now. And this comes down to the FOMC, but not really so much the statement. I think it's just really what the market wants to do. If the market wants to buy and have a nice Christmas rally, then you're probably going to see this get snapped with a bullish candle. Decision will be made, and we should be moving back upwards of this area and then hopefully onto an all-time high for the end of the year, hitting the top end of our trend line on the S&P and Nasdaq. But we're right around this area. One more day, we should have some kind of decision, we would hope. Let's move over to the SPY where things get a little bit more interesting. This is where you've got much better support resistances, because the thing with the SPY is it came down to the 460 area, the 4600 on the SPX. We have previous resistance, gap fill, now done. Buying pressure instantly came in. And on top of that, we also have the Fibonacci retracement. So if we look at the Fib retracement, it comes right into our 3850 Fib zone. And that's fantastic. It's exactly where you expect Wall Street to pick up positions. Sometimes you want to look at the smaller time frames to get a bit of an idea of how they were buying it. Was it considered? Was there some kind of double bottom or basing there? And I would say that the market algos had a few goes at it. They pushed it down, they pushed it down, they pushed it down, and it said, no way, we're ready to buy. And I think day traders, if you were looking at this yesterday, you would have been incredibly happy with this zone. This candle here would have given you the buy signal, and a few hours later, you would have been in some nice profit for your day trade. So it just shows that paying attention to the key levels on the top down can be really powerful. It's exactly where you expected the market to sell off to. After that initial rally, we sold straight off. Why would you sell off this zone? Because it's previous support. Then we rally again, a little bit of sell off, and we end up here. So 460 is the zone of absolute importance for the bulls. We close a daily underneath this area. Ooh, it's not going to look good, guys. I mean, it's a long leg doji. Look, it's a high, it's a low, it's an open and a close. The classic indecision. You break above, decision made, let's go. I would be very surprised if this level held and found huge resistance here again. It would probably be looking towards that bull side. If the bears get it underneath this zone, 45 or 450, here we come. And of course, underneath that zone, you're instantly starting to talk about the old triple top, double top. You've got your top here, you've got your intervening trough, you've obviously got your top here. And if you breach underneath that, that will be our first weekly 20 breach in quite some time. It would be really bad. And that's when you really know the bears are fully in control. So bears, look, you know what? You can get excited. You can come out of hibernation should certain things occur in the next couple of days of trade. But you can see what's at stake. Key levels, big zones, huge amounts of puts sitting all around this level as well for expiration coming into quadruple witching. We'll look at that in videos after the FOMC conference. And we've, of course, got that big 450, which is where we're finding the support. SPX is the same thing. The only reason I want to bring this one up is just remember the monthly R2 is sitting around 4,800, which is the top of the trend line. So it would make sense if Wall Street wanted to do this, because that would be a nice little uptick, good little Santa rally, hits the top of our resistance, and our community trend line has done very well for us throughout 2021. We've used this for a long period of time, and there it is. And you'll notice it's found all our resistances and been very, very good to us. So we continue to have that on the chart, and why would we take it off when it works so well? Where is the monthly S1? We've got the S1 sitting at that 4,500. So of course, that's why it's such a key level of support. What we mentioned a few weeks ago, why we got that bounce. And it's a big battle zone between these two at this stage. Bitcoin shorts still staying relatively stable, so it's not like the crypto market's looking super scary. But where the interest is actually Bitcoin itself. So let's think about what just happened here. We've got an 8-hour close, and let's look at the candles here just to think about it. We've got a bit of indecision. We've got a little bit of indecision. We've got a weakness looking candle and a big snap. It just went, damn it, we're going up. We're looking much better. So yeah, Bitcoin's starting to show the signs of a nice base formation. We got that scare coming through with, I think it was Coinbase and CoinMarketCap and a few others showing a 32,000 price or something on Bitcoin. I'm sure that freaked out a few people. If it did, let us know in the comments. I saw a few people during our live stream claiming that Bitcoin was 32K. I'm like, it's not 32K, guys. It's not 32K. Don't worry. That was just a fake price. And it probably shows you the signs of not panicking, quickly reassessing and looking at other markets just to make sure. Don't just press sell for no apparent reason. That would be bad. Let's move over to what we've got here. We've got a bit of a trend line. Do we breach this trend line? That would be a good sign of recovery. Of course, what we're really looking for is mostly this idea of an accumulation base. So we're at the daily 200. If we can accumulate, let's say we find a base here, we breach that 51, 52K, you know what this brings, guys. This is going to be a huge base formation, and we've had a couple of these recently. We've had one over here, huge base accumulation, looks kind of similar to right now, yeah? Look at that slope. breached, bang, off it was going. And then we had that huge one that once it breached over here, we got a nice run on it as well. So Bitcoin could be forming a nice base. Last time it tried it, couldn't get through the top. Let's see if this time it improves. Bitcoin going to be interesting. For anyone wondering when the FOMC meeting and all these things are going on, it's 2 p.m. New York time, ET, 2 p.m. FOMC economic projections statement, federal funds rate, and 2:30, the nice press conference where they talk all sorts of gibberish we barely understand, but at the same time, the market will move lots. Try not to interpret it, go with the price action. That's really all you can do in these types of things. And we do have, of course, the Friday being the quadruple witching event. There's so much going on in the markets right now, guys. If you've enjoyed the video, please subscribe, smash that like button, and let us know the answers to some of those questions. Were you freaked out by the Bitcoin thing? And of course, the other question we asked before. Catch everyone.